6 TradingView indicators for various market conditions, each with strategy options. Let's dive in. First up is the volume-supported linear regression trend by Lonesome the Blue. This indicator analyzes market trends by combining price action and volume analysis through linear regression. It calculates both short-term and long-term regression slopes for price movement, while simultaneously analyzing the buying and selling volume components. The VSLRT displays two main components: a short-term trend represented by colored columns that reflect both price direction and volume support, a long-term trend shown as a thicker line that provides context for the shorter-term movements. The indicator calculates buying and selling volume by analyzing the relationship between candle bodies and wicks. It then applies linear regression to both price and volume components to determine trend strength and sustainability. Set the short-term and long-term lengths according to your trading time frame. Enter long positions when both the histogram and the line cross above zero, indicating that both short and long-term trends have turned positive with volume support. The strongest signals occur when the histogram is bright green, showing strong buying volume, while crossing above the blue line. For short entries, wait for both the histogram and line to cross below zero, with the histogram showing bright red, indicating strong selling volume as it crosses below the orange-brown line. Exit positions when the histogram changes color or crosses back through the line in the opposite direction, as this suggests weakening momentum. Second tool is called the opening range with breakouts and targets by LuxAlgo. This indicator creates a dynamic trading framework based on the market's opening range. It identifies the high and low points during a configurable opening period, default 30 minutes, then uses this range to establish support and resistance levels and calculate potential price targets. The indicator displays the opening range as a highlighted box. When price breaks above or below these levels, the indicator can generate visual breakout signals. As price continues to move, the indicator automatically calculates and displays target levels at specified percentages of the original range. A notable feature is the daily bias option that considers the relationship between current and previous opening ranges when generating signals. When enabled, signals only appear in the direction of the current day's bias, bullish when today's opening range midpoint is above yesterday's, bearish when below. The indicator also offers an optional session-based moving average that resets at the beginning of each session, providing additional context for price action relative to the opening range. To trade effectively with this indicator, let the opening range establish itself during the specified period. Then monitor for breakout signals. Enter long positions when price successfully breaks above the opening range high, or short positions when price breaks below the opening range low. For more reliable entries, consider waiting for a successful retest of the broken range boundary before committing to a position. This approach helps filter out false breakouts while maintaining favorable risk to reward. Use the automatically calculated target levels for taking profits at logical points as price moves in your favor. Set your stop loss at the opposite side of the opening range to define clear risk parameters. This approach works best on intraday timeframes, 1-minute to 15-minute charts, for stocks, futures, and forex markets that exhibit clear opening range behavior. Third on our list is the Volatility Quality Index, VQI, indicator, developed by Lazy Bear and inspired by Thomas Stridsman, is a powerful tool for measuring volatility. It calculates a volatility quality metric by combining price changes with true range and range width. The indicator plots 3 lines on the chart: a red line representing the cumulative VQI, a green line for the fast EMA of the VQI, and an orange line for the slow EMA. The calculation takes into account price changes relative to true range, analyzes the relationship between open and close prices within the high-low range, and generates a cumulative volatility quality score. Users can fine-tune the indicator by adjusting the fast and slow EMA lengths to customize volatility and trend strength analysis. For this strategy, set the fast EMA, green, to 30. Look for long positions when the fast EMA is above the slow EMA and the cumulative VQI, red, crosses above the fast EMA, pulls back, and gets rejected. Enter the trade on a candle close after the rejection. For short positions, the fast EMA should be below the slow EMA, with the cumulative VQI crossing below it, followed by a rejection. Enter on the candle close after the rejection. The risk-reward ratio should be adjusted according to your specific trading approach and market conditions. The fourth and fifth indicators in today's review can be combined into a single strategy, so I'll first cover their features before explaining how they work together. The first tool is the Momentum Dynamic and Flow Expo Indicator by Zierman, a sophisticated tool that provides insights into market momentum from multiple perspectives. It measures momentum using two key components: Momentum Dynamic, which identifies overbought and oversold areas, and Momentum Flow, which evaluates trend strength and potential continuation. The indicator visualizes momentum through color-coded moving averages, with green and red indicating different momentum states. When momentum stalls, it highlights potential turning points or congestion areas, not as a definitive reversal signal, but as an early warning for traders. Users can display momentum at the top or bottom of the chart, position it near price bars, or use a background color for better visualization. It can be integrated into existing strategies or used as a standalone tool. The second tool in this strategy is UCS Squeeze Optimization by UDAYC and Thakumar, an advanced momentum indicator designed to detect market squeeze conditions, periods of low volatility that often lead to significant price movements. It visualizes momentum using a color-coded histogram and a zero line. Green indicates increasing positive momentum, while blue signals positive but weakening momentum. Red represents squeeze conditions or negative momentum, and orange shows decreasing negative momentum. This indicator includes multiple optimization features, such as Heikin-Ashi candle calculations, and the choice between Bollinger Band ratio, or rate of change, ROC, for momentum measurement. Customizable parameters include squeeze length, Bollinger Band and Keltner channel multipliers, and momentum smoothing. For this specific scalping strategy, no settings adjustments are needed. Default parameters work effectively. When price is above the average momentum line, wait for a pullback and enter long when the line turns green, and the UCS indicator confirms bullish momentum. For shorts, enter when price is below the average momentum line, the line turns red, and the UCS indicator confirms bearish conditions on candle close. Last script on today's list is called RMI Trend Sniper by TZAC88. The RMI Trend Sniper is a TradingView indicator that combines the Relative Momentum Index RMI and Money Flow Index MFI to identify trending market conditions. It creates a dynamic range around the price to help traders spot potential trend changes by calculating the average of RSI and MFI values to measure market momentum. Positive momentum occurs when this average crosses above the upper threshold while staying above the lower threshold, with confirmation from a short-term moving average. Negative momentum is identified when the average drops below the lower threshold with the same confirmation. The band's width automatically adjusts to market volatility using the average true range, ATR, while small markers appear at the bottom during bullish signals and at the top during bearish signals. Additionally, the indicator changes candle colors to match the current trend. With its dynamic range calculation, the RMI Trend Sniper adapts to different market conditions, filtering out noise and highlighting significant trend changes. For best results, combine with major support resistance levels. Enter longs when price breaks resistance and RMI confirms on retest. Enter shorts when price breaks support and RMI confirms during retest of the broken level. If you want to see more TradingView indicators combined into strategies, check out our latest video here.